Hello and welcome. Today we are talking a closer look at India's stock market outlook and why expectations of a reform driven rally may be overly optimistic according to few analysts. Despite high hopes from investors, Indian equities have had a difficult start of the year, currently ranking among worst performing major markets globally. So what's holding them back? Let's break it down. According to few analysts, expectations that Prime Minister Narendra Modi will introduce another wave of major economic reforms may be misplaced. In a recent in a in a in a recent conversation with analysts, they says the investment outlook for Indian equities in 2026 is no better than mixed. They argued that the government appears more focused on correcting past policy mistakes rather than implementation bold reforms aimed at boosting long-term productivity. As a result, the structural changes many investors are waiting for may not arrive anytime soon. Analyst says that India's nominal GDP growth will slow to around 8%, down from nearly 9.8% previously. Adding further uncertainty, the outlook could be complicated by the release of new GDP data series expected in the coming weeks, a move that may reshape how his economic performance is measured. Reforms and market valuations. While a market re-rating remains possible, analysts stress that it would require deep structural reforms, including opening up India's heavy protected agriculture sector, wholesale privatization of state-owned enterprises, many of which continue to operate at a loss. Without these steps, the analyst believes the government measures amount to what it calls tinkering at the edges. As analyst puts, some reform is certainly better than no reform, but it may not be enough to drive a sustained rally. Another concern is India's fiscal position. Analysts warns that a rising government spending is placing upward pressure on bond yields, reducing the likelihood that equity valuations can expand meaningful from current levels. In simple terms, higher yields make it harder for stock to justify premium pricing. So, according to analysts, Indian equities are now caught between improving corporate earnings, which offer support, and stretch valuations, which limit upside. The result, the analyst believes the most likely outcome in the coming month is sideways trading for Indian stock rather than a strong breakout. That's the latest outlook from analysts on the market. If you found this breakdown helpful, don't forget to like the video, subscribe for more market insight, and share your thoughts in the comments below. Thanks for watching, and we'll see you in the next update.